Hey everybody, Kelly Zitlow here. Hello, Tara Bradley. Thanks so much for joining us today. We are going to talk about reverse mortgages. And, reverse mortgages are one of these loan programs. It's been around for a really long time, but I think that it gets bad press. And it is important to know that I'd say maybe prior to, let's call it maybe the last 15 to 20 years, prior to FHA and HUD stepping in, there were some reverse mortgages long ago that were scary, and that what we hear today kind of stemmed from some of the things that happened back then. So just know, today we're going to talk about the HECM, which is the home equity conversion mortgage that is backed by HUD, and it is an FHA loan. And that's really important because FHA is very focused on seniors and making sure that they understand what they're doing with regard to the mortgage. They actually have counseling, and I love this. FHA requires that to be eligible for a HECM reverse mortgage, that the borrower needs to attend a counseling session. It's about 45 minutes to an hour. They can go in person or they can do it over the phone. And there's kind of like a little mini test. And this is by a third party, HUD-approved counselor. And they want, again, to be sure that they understand how the program works. And as a loan officer, we can't even be part of that. Like, we can't be on call or anything. And that's okay, because they don't want the loan officer to persuade them or to have any impact on their knowledge or decision. So I love that. Now, today we're going to talk about HECMs for purchase. And a lot of real estate agents don't realize that this is actually a thing. So we're going to show you a few different scenarios. So let me just pull up this PowerPoint really quick. I got my fancy DNC wand. Some of the keys are you have to be 62 or older to be eligible for a reverse mortgage. Now, loan borrowers, good question. Good question. Now, let's say we have one borrower that's 62 or older, but they're married to somebody that is younger than 62. That is still eligible. However, kind of keep this in mind, that the way that the program works is based on age and based on equity. So the younger the borrower, then the harder or more difficult it is, because the more equity that's required to be able to obtain the reverse mortgage, because their life expectancy. Exactly. Yeah. Because it's all about life expectancy and then just equity. That's how the program works. Now, I want to challenge you. Anything that you know about traditional, what I'll call forward mortgages. So that would be Fannie Mae, Freddie Mac, FHA, VA, everything you know. I tell Tara this. I'm like, hey, forget it. Out. It's stop, right? Because it's so different. The process is so different. They're not calculating like a traditional debt to income ratio. Credit score isn't a big deal. I mean, it's completely foreign to a traditional mortgage. It is age-based and it is equity-based. Those are kind of the drivers of how the formula works. Okay. One other thing to know is that borrowers must pay their property taxes, homeowners insurance, and HOA outside of the mortgage. And unless they have documented that they cannot pay those, or maybe have gotten behind on those. So we actually have a client right now, super sweet gal. Her home is free and clear. The value on the home is $500,000. She owes about $80,000 in credit card debt, car payment, and she only makes $1,600 a month in Social Security. So she is struggling to pay the minimum payments. And she's got this asset there of $500,000. She can't afford a monthly mortgage payment. So a forward mortgage is kind of out of the play here. So her financial planner actually referred her over to us just to engage in a conversation. So in her scenario, though, she is delinquent on her property taxes. So if the reverse mortgage has a caveat in that case, where if somebody has been delinquent on property taxes or homeowners insurance, then they will kind of use up part of that equity to set aside an escrow account to pay those. But I caution you that that's not normal. That would only happen if somebody has shown their inability to keep those things up, because those three things are absolutely key to the success of a reverse mortgage. Yep. Cannot go delinquent on taxes, insurance, or HOA fees. All right, so this is just going to kind of walk you through some of the scenarios. So we see all different types of reasons of people, maybe wanting to explore a reverse mortgage. And essentially the key goal is not wanting to have a house payment. That's like the bottom line goal. Yep. And so many of our seniors have worked for many, many, many years to pay off their home. But Tara, what were those stats? So yeah, we have a few stats, but just what we're seeing here. So financial peace of mind, quality of life, maybe they want to still travel, but they're tied to like a house payment, like how freeing a reverse mortgage could be, alleviating debt, like Kelly would say, or just, needing cash immediately. Well, we had, and here's some really great stats. So homeowners 62 and older saw their housing wealth increase to a little over $9 trillion. So there's lots of equity out there. But on that same note, we have had so many conversations with people that maybe a spouse has died, so their household income has dropped, and they're sitting on all this equity, but they've got to kind of approach or reposition how to go forward without that spouse or their income. I love this one. 10,000 baby boomers turn 65 every day. Yes. For the next 6 years. Yes. We got to repopulate. So yeah. And Americans are living longer. So there was one stat that there were 300,000 Americans 100 years or older in 2022. And like back in the 60s, that was like 100 people, right? Just how people are living longer. Yeah, we're living longer. And things are more expensive. Yes. And there's a little thing called inflation. Yeah. All right. But today we do want to talk about reverse mortgages for purchase. So we have a couple of scenarios here. And this scenario, we're going to talk about downsizing. Downsizing is a reason that a reverse mortgage would be a great option. So in this scenario, we have a couple. They're 70 years old, and they have a home now that's free and clear, and they're going to sell that house for $500,000. So as a real estate agent, you're selling their house. And we've used about 8% for all-in fees, assuming commissions, maybe, title fees, seller credit, whatever. So in this case, they're netting about $460,000. And let's say they're going to downsize and they're going to purchase a house for $350,000. In column one, that would give them, out of their net proceeds after purchasing the new house, about $110,000 cash in your pocket. So scenario one, easy peasy. Yep. Yeah, but let's say that they wanted to reserve a little bit more cash, whether that is for future kind of healthcare things that they know are around the corner. Maybe that's caring for a child or a grandchild. All kinds of things come up in life. Yep. So scenario two could be an alternative and a great picture of using a reverse mortgage for a purchase. So in this case, again, they're selling their old home for $500,000, walking away with roughly $460,000 based on their age, and purchasing a $350,000 home. They're coming out of pocket with roughly $153,783, which means that they have about $263,000 to put cash in their pocket. So just kind of like a different way of leveraging that asset and how to do that without having a mortgage payment. So that's a great scenario. Yep. Any thoughts on that? Yep. Well, so what happens with this mortgage now of $153,000? Yeah. So that's a great question. So it is important to know that it's a reverse mortgage, meaning that in a traditional mortgage, when somebody takes out a traditional 30-year fixed rate, let's call it conventional loan, every month when you're paying your payment, part of your payment goes towards principal, which is reducing your balance. Well, in a reverse mortgage, you're not paying a payment, but that balance is increasing by the interest that's due on the loan. And because this is an FHA loan, the mortgage insurance. So that loan balance is increasing. And as part of the reverse mortgage proposal, there is an amortization schedule that shows people year over year over year, based on a 4% appreciation, market value appreciation, what is happening to the loan balance in relation to the market value. So I really like that because it kind of helps to show the picture. Yeah, I think there's so much fear on this loan. Absolutely. That the more we can just illustrate how the numbers work, I think it really helps people kind of get past that. Especially for their heirs and their kids, really, I think is the bigger piece that's having them understand what's happening to mom and dad's wealth and their home. Yeah, I think it does become a family conversation. And I always like to start there when I'm talking with a potential candidate for a reverse mortgage. So what is their intent do they have children? What's their intent with their house, with the inheritance, and kind of let them share what they're thinking. Because if they do have children, and if the children are very focused on their inheritance, then this may not be a good program. And if, so I think it kind of becomes a family conversation. Now, most of the time, the children are like, look, we want our parents to live life, to not be stressed, to be able to access their equity to do so. So in most cases, if it works out well, but I do think it's important just to understand, there could be a point where potentially the balance on the loan in relation to the market value is inverse. Now, let's say it's not. And let's say that market value continues to grow, call it 3 to 4% per year, which is pretty conservative. If it changes, 4%. And let's say that loan balance is increasing. And let's say in 10 years, mom and dad pass away, and now the kids or the heirs inherit the house. In that scenario, it's important to know that mom and dad still owned the house when they passed. And so if it's in a trust or whatever is the vehicle is to get to the kids, now the kids are going to go sell that house just like they would if it was free and clear, or just like they would if there was a traditional or forward mortgage on it. So let's say the value in the house is $500,000. Let's say they owe $300,000. They call you as the real estate agent. You list it for sale, and then after costs, net proceeds goes to the heirs. So it does work the same way. And I think, again, when I think about myths, there's all these kinds of crazy stuff out there, but one of them is, that you're not on the title to the house if you take out a reverse mortgage, and that is just not the case. When you think about the requirements, a couple things. One, you must occupy the property as your primary residence. And two, you must maintain the property and pay taxes, insurance, and HOA. Really the requirements. So we have had the question of maybe somebody falls ill, maybe they have to go into a rehabilitation home or a hospital. And in that case, I would just encourage the heirs to be sure to communicate with the reverse mortgage lender, because they are very lenient in those situations generally. So the rules are they can have up to 6 months without actually residing in the house, especially if there's like a medical treatment plan going on, and the goal and the intent is for that person to return to the home once they're better. So that's how that works. Okay, good. I just feel like I'm just talking like a million miles a minute. It's very exciting. I know. So excited about it. Okay, so reverse mortgage scenario number 2. And again, we're going to focus on reverse for purchase. In this case, we've got our couple who are 70 years old. They have a home that's free and clear, and they're selling it for $500,000. But instead of downsizing, they want to upsize. And so, or maybe are moving to a more expensive market. Yeah. We have a lot of people living here from the Midwest. And they get here and they're like, holy smokes. For me to have the house I want, it's going to be a little bit more, than the $460,000 that I have cash in my pocket. So this is how it could work in that scenario if a reverse mortgage is used. So column 1, let's kind of run through it. Traditional old way, sell the house, minus estimated cost, net proceeds $460,000. They want to buy $700,000. They've got to come up with $240,000. They either do that with a home loan, which means they're going to have a payment, or they go access their assets to be able to then pay cash for the house. So that would kind of be scenario 1. And in scenario 2, does it mean that in our case, our couple are 70 years old? They're going to sell their house, maybe from the Midwest, relocating out here to sunny Arizona, and their net proceeds are $460,000. They want to buy $700,000, and the reverse mortgage funds due are $305,000-ish, which means that they can buy that $700,000 house. They will not have a house payment, and they get to keep about $65,000 from the sale of their home in their pocket. Yes. Like, I just love the whole strategy, kind of like the scenario stuff. And look, is this loan program for everybody? Yeah. Because there's no home loan program that's for everybody. Yeah. It really comes down to what their goals are and, what they're trying to achieve. But it's a myth to not understand and realize that this home loan program is such a great tool. And if you're a real estate agent out there working with a lender that's not us, it's just another thing to be thinking about if you have senior buyers that are just kind of I don't want a house payment. Well, there could be a solve for that. And maybe there's not a solve for it right now. But at least knowing that the program exists is kind of half the battle here to have the conversation.
Yeah. And a lot of lenders broker these deals, right? So that's something that like we have in-house, like,
yeah. So we actually have a mortgage division. Yeah. That, so we've got just such a great team that helps our loan officers here at Cornerstone to serve this community. But I think, too, the other thing is that not all lenders even know about reverse mortgages. So it is one of these very niche programs that kind of you either do them or you don't. So certainly be asking a lender if you think it's a viable option. Be asking your lending partner or give us a call. We're happy to kind of fill you in on the details. This slide does show, again, I'm kind of go back, how counseling is required. Now let's talk about one of the big things that was a recent change over the last, I'll call it year and a half. I don't know. Time is just flying. It made it kind of into, I don't know, recently. And that is, it used to be that on a reverse for purchase, HECM, that you could not get any seller credit towards closing costs, which is always kind of perplexing to me because FHA on the traditional forward mortgage allows for up to a 6% seller credit. Well, guess what? That changed on reverse mortgages. And now FHA does allow on the HECM reverse mortgage program a seller concession up to 6%. So great. Which means we can use it to cover closing costs and all those kind of things. So, but if you have questions, I mean, certainly ask them in the comments. And I think let's just kind of wrap up on some real life scenarios. I mean, these are conversations we have all the time. And there's so many different ways. And I'm like highly strategic, so is Tara. So this is like why we jam and why we've been together for over 15 years. But, the strategy is just so key. So we had the client right now who's got some credit card debt. We had another client a couple months ago who her spouse passed away. And I mean, their household income went from $5,500 a month to $1,500 a month. And she had a mortgage on her home, and we were able to go in and pay that mortgage off because she had enough equity and then be able to eliminate her house payment. So it really can be life-changing. But I think, too, that people often think, well, it's only for, people that are struggling with, paying their payments. That is definitely could be an option, but it's not always that way. No, we see all kinds of different ways that people utilize reverse mortgages. And mostly it's to minimize cash out of pocket versus paying cash for the house. And to really just be able to kind of achieve whatever their goal is and not have a house payment. That's a driving goal. Absolutely.
And I have a girlfriend, her mom has Alzheimer's, and her dad is like, they're still living in their house together. He's taking care of her, but at some point she's going to need to go into a home. And she worked for the government. She has all of their retirement money. So when she goes into the home, her income goes away and dad is left with just Social Security. And like, I have talked to them a few times and they haven't pulled the trigger yet, but what a great option that will be for dad just to have some peace of mind, because he doesn't want to move, because he doesn't know how he's going to afford the next house. His current house is pretty clear. But like, there's so many different scenarios, and just how it could help them have the financial freedom and reduce the stress.
We actually did one for my mother-in-law who, she has a son who lived with her, and he had some challenges, so he couldn't live up on his own, some medical challenges. And she was so worried about what would happen when she passed away. So when he turned 62, I don't even know how old she was. She had to be like 80, 85. We were able to do a reverse mortgage. So both of their names on it because he was 62. She had enough equity to do that. And it gave her so much peace of mind to know that when she passed, he was going to be fine. The house transferred to him because he was already on the mortgage. And he can live there as long as he can occupy it as his primary residence, pay his taxes, his insurance, his HOA. So it was just also just like the security of just like, wow, what a great solution. Her just being able to breathe deep and kind of transition to the next journey, the next chapter without any stress or fear. So So many different scenarios. Yep. And you guys, if you have questions about reverse mortgages, please do not hesitate to reach out. You can reach us at 480-725-0150. And just, ask whatever question or share this with your family, your friends, your sphere. And now that you know a little bit about reverse mortgages, now you can't unknow it.
Yeah.
Yeah.
The conversation.
Yeah. So we host these webinars once a month, and our next one is going to be March 19th, and it is at 10:30. What will be Pacific Standard Time? Yeah, because I got this whole time change thing. Yep, it is. But if you have thoughts about what you want to hear from us, feel free just to text us at that number or email us. We're always looking to bring value to the real estate community and just kind of have very, as you can see, like unscripted, real conversations with our community and our real estate partners. We value you and we appreciate your participation and your cooperation as we kind of work through these scenarios. Yeah.